GEVO third quarter 2025. Is this going to be the breaking point towards profitability, or is this going to be another step towards a big crash? Hey up everyone, welcome to Martyn Lucas Investor. I'm Vaz. Do you know what time it is? It's time for anything. It's time to come back. It's time to come back after a very long weekend. Last week I didn't go live with my eVTOL show today because last week has been manic. I had a great show on Thursday. Thank you very much for joining me. You made it the best show so far. But I was away on Saturday and Sunday. I came back last night, 2 o'clock in the morning, pretty much. Oh, that's when I went to bed. And yeah, it was very interesting weekend. I was traveling for work, if you will. And you will find out very soon where I was and when I traveled. So what we've got on for today? Well, we are looking at GEVO Incorporated. What does GEVO do and is it interesting to us? Well, let me give you a quick breakdown. We will go through the markets. We'll go through the eVTOL markets as well. We will ring the closing bell. After the closing bell, we should get the numbers out. As soon as I explain what GEVO does and put this into context, we will go through the numbers. And the webcast should be starting in about 40 minutes. So it won't be long, and we will be listening to the results. Right, have a look at my notes. What does GEVO Inc. do? They are renewable fuels and chemicals company. I've known this stock. I've never followed it. I'm not invested in this stock, but it's been around for a while and it's been on my radar for a while as well. And I will tell you why. So what they do, renewable fuels and chemicals company. They convert corn and renewable gas into sustainable aviation fuel. SAF. Remember this. This will be a big thing probably towards the end of the decade. Or as soon as Donald Trump's administration departs the White House. It could be a massive boom in the sustainable aviation fuel technology and market. Drop-in fuels compatible with existing engines and infrastructure. They operate under a circular carbon model. Fuel, feed, plus credits. We'll get to that shortly. They target net zero carbon fuels for aviation and transport sectors as well. Their market position, they compete in the growing sustainable aviation fuel market and low carbon fuel sector. Yes, you are thinking it's not a big market now, and obviously the current Donald Trump administration, which is pushing sustainability to one side, is not in favor of this. However, it's not only the United States, it's Europe is a big market. There's a lot of startups and a lot of starting projects. They have very good potential in this market. And actually, the oil companies have been developing and exploring their own version of the sustainable aviation fuels as well. So US jet fuel demand expected to rise to over 2 billion gallons in next decade. They developed their modular ATJ-30 and ATJ-60 plant designed for scale, and they are still in early stage. Execution and funding risks remain. However, they have very good upside and very good potential. Critics highlight 52 quarters with no lasting profit until second quarter 2025. And this quarter could be good as well. So what is their product? As already mentioned, sustainable aviation fuel, SAF, also known as SAF, via alcohol to jet pathway. Renewable gasoline and diesel blend stocks. Renewable natural gas from dairy waste, yeah? And their co-product is animal feed and corn oil. So basically, they create fuel from organic materials, and the byproduct, by the way, the byproduct is feed for cows. How about that? How about that? Well, their customers, They don't have any significant customers yet, or major customers they would mention, or they would disclose. However, their target markets are obviously airlines, fuel blenders, and refiners. USDA Farm to Flight Program, farmer partnership for low carbon feedstock. Sold clean fuel credits to banks and corporate buyers. We will hear about this on the earnings call. And future goal, long-term outtake agreements with airlines. So their financial position, before we get to the third quarter forecast and what we can expect from the third quarter. Their current revenue as of second quarter 2025, 44.7 million. However, they are finally generating income, and we could be at the early days of a big push-up. If they confirm the growth and if they give good guidance, I have no doubt that will be there. This will have reaction on the stock price. Adjusted EBITDA for second quarter 17.3 million, and cash and restricted cash 126.9 million. So their position will be now dependent on their revenue. And again, we will hear updates on this on the earnings call. Debt to equity 0.29 and current ratio 2.3. And first profitable quarter in company history just gone, the second quarter 2025. And I think we will have some good numbers for this quarter as well. They are heavily relying on credits, and they generated over 20 million in 6 months. Highlights from the last quarter. They produced 28 million gallons of low carbon ethanol, 93,000 tons of feed, and 8 million pounds of corn oil. So this is the byproduct. This is the feed for cows. They sold over $1 million worth in carbon removal credits. So they also invest in technologies and develop technologies. They remove carbon from the atmosphere. They expect 3 to 5 million for this year. And they have positive EBITDA from GEVO, ND, and RNG segments. I'm not the best person to explain it because I dipped my toe into this just today. I knew about the company, I knew about their product, I knew about their venture, but I have very shallow knowledge of it. I can see a big potential because I followed this company before, and I can see a big upside because the sustainable aviation fuel will be a big market. Same as eVTOLs, same as anything green, electric aircraft, you name it. So let's see what the guidance is. Let's see what the numbers are and what the guidance for next quarter and financial year 2025 is. Once we get this out, we'll no doubt hear about their product and their development as well. So stand by. It'll be a few minutes. We will close the bell and we'll get to the numbers. As soon as the numbers are out, I've got my alerts. I'm monitoring it. As soon as we get the numbers out, we'll get to it. And I've got a webcast on standby as well. I know this might not be interesting stock for now, but we might be at the early days because first profitable quarter in 52 months, it sounds bad. It sounds rubbish. However, this could be the turning point, and we could be there early doors again as we are. So let's have a look at the markets, what we've got here. So the overall markets, the S&P, after Friday's dip. Was it a dip or was it a crash? Well, we are up. We are cooking on oil. We are up 1.4% on the day. Nasdaq, 1.5%. Bitcoin, up. XRP, big day for XRP. Look at that. 8.4%. Wow. Is that 8.4? Yeah, that is. That is. I couldn't believe it. I thought I'm misreading it. Ethereum, we've got slightly down. And gold and silver, 2 and 3/4, respectively, 4.5 percentage points on the day. So very good day after Friday and Thursday's crash. what the eVTOL markets have been doing. Vertical aerospace. I know everyone's been looking out for their flight. I have been looking out for their flight as well. I didn't get anything confirmed. I had my eyes on the ground on Saturday when it was beautiful weather in the morning. There was like 3-hour window where it would be the best time to fly. Didn't happen for whatever reason. But Donald Slattery, the chairman of Vertical Aerospace, he confirmed, they released a video when they are describing their market position. He mentioned that they'll be flying in next couple of weeks. So the flight is imminent. And I wouldn't, if you bought in last week, I wouldn't be selling now. I would be just holding and wait for the catalyst. Look at the levels. We are still above the highlighted $4.20 support line. So I think we are still in the safe zone. We did break through it on Friday. We went all the way to 390 something, but we recovered. And look at that. Look at the upside. And I think we'll be going sideways again, as I've been predicting for a while. I'll be bouncing between $4 and probably $4.60 for the next few days. And in the meantime, we should get the news out. Archer Aviation. Did you buy the dip? Did you buy the dip on Friday? Where are we? Yeah, there we go. That was the earnings call. This was the critical support we broke, and then we created small one on $8, and then next stop was pretty much almost $7, which I highlighted. We could go as low as $7 on a very bad day, and we almost did on Friday. We had $7.20, and then again recovery. Today Archer has been going sideways. However, Joby, we have the rally, not the rally, but the little pump I predicted. Pump, 4-5%. Is it a pump? It's not. But we have finally the upside after the earnings call, which happened, where are we? Which happened on Wednesday here. On Wednesday, we had a sell-off because it was under macro conditions. And then Friday, there was a little crash. But now we are up. And I wouldn't be surprised if Joby keeps coming up. Horizon Aircraft, slightly, very, very slightly recovered from the crash on Friday. But I wouldn't be holding my breath. If we break through a $2 support, we are looking at $1.50. Just before we started this massive rally, this big rally. EVA Mobility going sideways, no significant moves as we can see. And Beta Technologies are recovered from the dip on Friday as well. And they have been holding very, very well, considering they opened their trading. Their IPO was on Monday, and they opened their first trading day was on Tuesday. Have a look. Reasonable levels. This crash, this little dip, is based on macro. This, and we have a bell. Hang on, we have the bell. So let me ring. Is it ringing?
Desktop 602K49.
Is it ringing? It's not ringing, is it? Hang on, I'm having sounds coming from all sides. Bear with me. Let's ring the bell again. Let me just reconnect this. I'm having some technical hiccups. This is what happens. That's why Martyn has to take 6 weeks of holidays, because once he touches something in his studio, everything is connected, everything is interlocked. It's like a network. It's like a spider web. And once you touch something, everything starts going down the toilet. So let me just try to recover this. That is connected. That's not doing anything. I can see no noises coming through. That's not me. Okay. Let's ring the bell again. There we go. I do apologize for the technical hiccup. Let's have a look what the market is doing on the market closing bell. We've got the S&P holding, Nasdaq holding up 1.5%, S&P 1.33% on the day. Bitcoin up over 1%. XRP slightly cooling off, but still up 7.5%. Ethereum slightly coming down. And gold and silver holding. Gold is actually slightly going up. Have you been making money? Have you been making money today? Are you up or down? Let me know. Shall we do day trader of the day? I can't play Phoenix, can I? Let me know if you are up or down. Let me know if you are up or down on the day. I'm gonna do the day trader of the day. I'm looking out. Zach is saying the train is coming. Zach, this is the, believe it or not, this is the official New York Stock Exchange bell. This is not a train. This is not a train. Look. This is the official New York Stock Exchange bell. Believe it or not. S&P, what is S&P doing after hours, after the closing bell? Going sideways. We can see it on the chart. We had a very good recovery from Friday. Look at this. If you bought the S&P on Friday, how much up are we now? 3%. Wow. Over 3% from the dip. That is very impressive. Did you buy on the dip? Did you not? Hang on, let me do my input into my tribute. I'm down 0.9. So I'm first down 0.9%. Let's do day trader of the day. Where are we? Where's the percent sign? There we go. So, oh, not this one. Oh, I'm using, hang on, let me remove this. I'm using wrong. Let me switch the account again. I told you, you just disconnect everything. Well, you disconnect things and everything stops working. I do apologize for the technical issues. Let me know. Are you up? Are you down? Let's do a day trader of the day. We are looking out for the numbers for GEVO, and we are sort of limping through the day, aren't we? Zach is up 0.66%. What am I saying? 0.66%. Poor man to rich man, 1.74. Very nice. I know you are invested in XRP, aren't you? Cedar trees up 3.09%. Oh, look at that. Abby up 2.9. Ooh, very nice, very nice. I love to see the numbers. Yeah, I don't have a Phoenix. I need to get it from Martyn and Sensei. See, they've been keeping it away from me. Yeah, poor man is never poor. Right, let's go quickly through the chat. We are running a poll. Let's have a look at the poll. I'm closing the poll in 10 seconds. Cast your votes. Do we have any investors in GEVO? Yes. Investing, trading, no, and never heard of them. If you've never heard of them, you are in the right place. I already explained what they do, and I will be talking about it more. Let me just zoom this out. What happened is actually more to it. I did what I did just literally before the show, like 3 minutes before the show. I tried to my cable connected to the camera was a bit short, or was stuck under my, just behind the scenes. It was stuck, and I didn't know it was stuck, and I didn't realize it. And I was trying to push it, and then I pushed my PC, and as I pushed my PC towards back so I could reach and I could plug it from the front, I pressed the power button. So I I put my PC into sleep for like 2 minutes, and then I managed to recover it before the show, but that's why I started about a minute late as well. So who we've got in the chat? Oh, one more important thing. Sorry, I owe you the GEVO chat. So let's have a look at GEVO, what GEVO is doing. Let's zoom out first. And have a look at the numbers. You could see this spike back in September. Was it in September? Was it in October here? Was in October when certain senators started buying GEVO stocks. Fairly, I don't want to say fairly heavily, but they got interested. And they raised a big wave of interest as well. So if you look at this, the senators started buying somewhere here, obviously before this comes out, before this is disclosed. We entered a very nice rally. We entered a very nice rally of almost, or maybe even over 100%. Some of these have sold, but I couldn't find any information of how many senators and politicians are involved in GEVO. But I know last year, end of the year, it was trending because American senators were buying into before this little push. They caused, I think they pretty much caused this nice push, this nice little rally of over 100%, and then it's been just going down and down in two phases. The recent low was around $1 or just over $1. And what we can see here, why do I have this trend line? Thursday. I may have done it when somebody requested the... I don't even know why the trend line is there. That's interesting. Okay. Right. Let's zoom in. Let's zoom in and have a look what GEVO has been doing today. Look at that push. Look at that push to the closing bell. And that's after the closing bell. So the numbers might be out. I haven't got any notification yet. Let's quickly check through what's going on. And through the newsletter, as we read through the shareholders letter, not newsletter, we will find out what is the crack, what are the news, and why the company is reporting what they are reporting. I cannot see anything here yet. I cannot see anything here either. Let's have a look at the overall market. Quarterly results. The numbers are not out yet to me. Let me just double check. No, I cannot see any numbers. However, look at this long green candle. Look at this long green candle to after the closing bell. This could be a good sign. This could be a good sign. Let's turn back to the chat before the numbers come out. Let me get some liquids. Right. So, who else is here? Zach is here. I need vase to place my flowers in. What do you mean? Need vase to place my flowers in? Am I missing on something, Zach? Abby is here. Thank you for joining. Zach, SMP 4433. What do you recommend? Buy before or after earnings? Definitely after earnings. Very, very rarely I do recommend buy before the earnings. Unless you follow the company in and out. GEVO 3 revenue beats expectations. There we go. So we have news. News are out. So the numbers are out. They are not issued to the shareholders yet. But let's have a look. Very rarely do I recommend to buy before the earnings. GEVO earnings. Very rarely do I recommend to buy before the earnings because it's not about the numbers, it's about the guidance. And you could hear, you could see it last week. We had Palantir who beat massively, yet the stock hit all-time high, 222, dead on, and it sold off. And it sold off like 15% in the next following 2 days. Let's have a look what we've got here. So the consensus earnings per share estimate is negative $0.06, and the consensus revenue estimate is 31.37 million. We don't have the numbers out yet here. Let me try a different source. Yeah, so definitely don't feel like we are missing out on anything. This company is in a very, I would say, early stages. We are not talking about Shell. We are not talking about Chevron. We are not talking about massive global animal. You can always catch up, and you could see if you look at it. If you look at the chart again, plenty of opportunities. We had these points when everyone was buying in. Back of last year. Look at this, October, and everyone was missing out. Everyone was freaking out just for the stock to sell off and go back all the way to $1.30, $1.40 levels. And again, we had another push. People were buying, thinking they were gonna miss out, and then again we sold off. So we might have a nice little uptrend. However, on the uptrend, you can always enter. There are always better entry point if you know the stock is going up. No rallying, no rallying. If you know the company is growing, they are on the track, they are delivering their product, they are doing what they should be doing, what they are promising. There's a nice trend line. And on the trend line, not on a spike which sells off. On the trend line, there's multiple entry opportunities. So again, I would definitely wait, especially for a company like this, who reported first positive quarter after 52 weeks, the last 52 months, the last 52 quarters, pardon me. Abby is here, Cedar Trees, Zach, thank you very much for joining. Cedar says, October the 8th, 2025, Trump administration grants loan guarantee extension for GEVO as proposed sustainable aeroplane fuel plans for 1.46 billion. There we go. I mean, Cedar Trees, you probably know more than I do. I just did a quick research today. My knowledge compared to you is very shallow, so don't stone me if you find some discrepancies. Let's quickly check if we have the numbers out. I cannot see anything yet. I could see it from... Oh, there was Reuters. Okay, let's have a look. GEVO earnings news. It was coming from Reuters, but if I go to Reuters 3 minutes ago, there we go. So let's have a look at this. Right, we are cooking on gas. GEVO third quarter revenue beats expectations. So, and I can't access this because it, okay, so let's get back to the stock chart whilst I'm arranging this. Oh, look at the stock going. Look at the stock go. Ooh, very nice. Very, very nice. So let me just find this because everyone needs paid membership. Everyone needs you to register. Everyone needs to. Right. So the only resource is Reuters. And I can't access this publicly. So let's have a look at the news. It was here. GEVO third quarter revenue beats expectations. So if we click on, oh yeah, I can see it. It didn't load. Revenue 42.7 million. What was the expectation? The expectation was 27 to 31 million. Wow, that's some good news. What else we've got here? Third quarter revenue, what is the earnings per share? Lost share, 3 cents, so it's negative 3 cents. We were expecting negative 4 to negative 6 cents. So the numbers are good. The numbers are good. You can see the reaction. I would not be buying it now. I would not be buying it now because it can retract very, very quickly. And you saw it last week. You could see it on Microsoft earnings. You could see it on Palantir. You could see it on, what was the other one we covered? Tesla. It went completely sideways and then downhill. What else we covered? Amazon. You could see it on Amazon as well. So I would be careful. Trying to catch it now. October the 8th, Cedar Tree says granted an extension on that approval to April the 16th, 2026, according to a statement from GEVO. The extension will allow the company and the Department of Energy the Department of Energy, to consider potential modifications to the scope of the project to address this administration's energy policies and priorities, according to GEVO. I have ringing in my ears from old age. Does no, it doesn't count. Phoenix, yeah, I will get a Phoenix sorted. I will get a Phoenix sorted. Train is coming. Yeah, you are up. Everyone, pretty much everyone is up, apart from me. Okay, fair enough. No, my portfolio is not very diversified. My portfolio is just a skeleton crew of what it used to be. United States bio-based sustainable aviation fuel industry is skyrocketing to hit 4,772,000,000 by 2032. There we go. See that? You should be here in the studio with me, telling all these news, telling all these updates. I love it. Thank you. And this is what we are about. We are just working together and we are learning from each other. Top companies are Sky, NRG, LanzaJet, Swedish Biofuels, AB, Eni or Eni, GEVO and Shell. WTF is here. September 2025, the US government introduced the new incentives to boost bio-based sustainable aviation fuel adoption across commercial aviation fleets. There we go. So it's even incentivized by the government. We all doing great. Just keep the family strong. Yes, I agree, Zach. James is here. Thank you for joining. Abby, good day. Bentley's mom. I have had this company for the last 5 years, 10,000 shares. Bentley's mum, what is your average? What is your average? Don't tell me how many, well, you've told me how many shares, but what is your average? I'm well interested. Cedar says it's a beat, but third quarter net loss of 3 cents per share, but it was a beat. Yes, I agree. James says big swings down and up recently in the stock market. Stock market is fun when there are big swings, but when it's like this, it's more like gambling in disguise. Which way the markets will go, nobody knows. Let's have a look. I still don't have the numbers out, so let's check their website. The chart is doing very well. The chart is doing very well, and we've got the earnings released. So let's have a look. Let's have a look. We don't have a presentation, we just have a website. However, it doesn't matter, because I can actually, it's actually better, because look what I can do. I can nicely zoom in, and it's finally not a stupid PDF slide in landscape mode where you can't zoom in when every line of the table is this long and you just can't fit it in the screen, and you are watching on your mobile like this and you can't see it. Thanks, GEVO. I really appreciate it. From the show perspective, I really love it, because look, I can zoom in like this and everyone can see it, and I can read it better as well. That's great. So let's have a look at the chart again. Let's have a look at GEVO Go. So as of the closing bell, let's have a look what we've got here. So this is about 10% swing. That's good. The next candle is opening slightly lower, so it's not massive rally, but it can hold. Let's see what the guidance is. The webcast, let me just quickly refresh the webcast. We should be starting 4:30 Eastern, yes, as I was expecting, so there's no delay. Let me just quickly re-log in. Let me just quickly log in again. There we go. So we will be starting. We'll be starting in about 9 minutes. As music in the background already, that's always a good sign. I cannot play the music for copyright reasons, but I'm monitoring this. Have a look. The webcast is on standby. So let's quickly flash through the numbers. Englewood in Colorado, November the 10th. GEVO Incorporated, traded on NASDAQ as under the ticker symbol GEVO. a leading developer of cost-effective renewable hydrocarbon fuels and chemicals that can also deliver significant carbon emission abatement, today announced financial results for the third quarter ended September the 30th, 2025. The company reported a 3.7 million loss from operations and positive adjusted EBITDA of approximately 6.7 million for the third quarter. This marks a second consecutive quarter of positive adjusted EBITDA for the company. So if they keep this trend, we could be at the beginning of a good upside. However, 52 quarters without profit, it's quite a lot. So I would still be very careful. Recent corporate highlights: consistent performance. GEVO reported a 3.7 million loss from operations for the 3 months ended September the 30th, 2025, and positive adjusted EBITDA of approximately 6.7 million for the 3 months ended September the 30th, achieving a second consecutive quarter of positive adjusted EBITDA, driven by consistent performance at our GEVO North Dakota facility and our renewable natural gas facility. What else we've got here? Carbon sales. During the third quarter of 2025, we signed a multi-year offtake agreement expected to generate an aggregate of approximately 26 million in carbon dioxide removal credit sales revenues over the 5 years, with an option to expand the volumes under the agreement. We reiterate our target of growing our carbon co-product sales from 1 million, in the second quarter to 3 to 5 million by the end of 2025 through our relations with current customers such as NASDAQ and BioRecro, which we believe will sustain a growth those revenues for years to come. We estimate long-term carbon co-product sales could exceed $30 million per year or more as we optimize how we count and sell our carbon. Our carbon is sold under the Pure Earth standard with more than 1,000 years permanence, which we believe ranks amongst the most durable and realizable carbon available on the market today. Clean Fuel Production Credit. On November the 5th, 2025, I told you don't buy it on the way up. You can now see it. It can easily retract all the way to $2.20. I told you, don't buy it on the way up. Wait for the call. Clean Fuel Production Credit. On November the 5th, we announced that GEVO North Dakota sold all 30 million of its remaining 2025 Clean Fuel Production Credit, also known as Section 45Z tax credits, bringing the total for the year of 52 million. So we are not only selling product, we are also selling the allowance of produced carbon to other companies. That's good. Few more notes. In the third quarter of 2025, our carbon capture and sequestration, and we talked about this last time. Sequestration is a chemical process when you dissect certain components from a compound, which is gas in this case. Gas as in air. Operating crossed a milestone of more than 560,000 metric tons of carbon sequestrated since its startup in June. Sorry, it's very difficult for me to read. 560,000 metric tons of carbon sequestrated since its startup in June 2022. That is a good number. We believe this demonstrates that CO2 can be effectively captured and sequestrated at scale for many years. This is very good and very big positive side. So for many years capturing CO2 that ultimately came from the atmosphere and avoiding CO2 emissions. The GEVO North Dakota site was the world's first ethanol dry mill site to request sequester. I'm so sorry. Sequester carbon monoxide. It's like, you know what? It's like when Martyn is doing pharma earnings. He can't read the names. I'm the same. I always laughed at Martyn. You know, it's so easy. It's so easy behind the screen. Now I'm sorry. I think that the call is coming. It's gonna start in a very The call is about 3 minutes away. So let's quickly run through these notes. Operations. During the third quarter of 2025, we produced approximately 17 million gallons of low-carbon ethanol, 46,000 tons of protein and corn oil co-products, 42,000 tons of sequestered carbon, and 92,000 of MMBTU or RNG. That's the natural gas. Jet fuel projects. This is what I'm interested in the most. So jet fuel projects, synthetic aviation fuel or SAF. GEVO is targeting final investment decision in mid-2026 for its planned ATJ-30 facility, a bolt-on growth project to produce jet fuel from existing low-carbon ethanol products. Ethanol production at GEVO North Dakota. With an estimated construction time of 2 to 3 years, jet fuel derived from this process is also known as the SAF. As I was doing my research today, I found that GEVO mentioned that there could be a requirement of up to 20 facilities to produce sustainable aviation fuel by, I think they said by 2032. So again, there could be a big upside. There's a lot of potential in this company and this stock. We are about 1 or 2 minutes away. The stock is now slightly up, not moving. Do we have any comments? Cedar, I can see Cedar is trading. So let's end the poll. Are you invested in GEVO? We have 47% non-invested, never heard of them, 30%, 19% of investors, and 4% trading. Very good. So let's have a look. I would like to hear from you once again. Will substantial aviation fuel... No, do you see future? Do you see future? That's a better question. Do you see future in substantial... Am I spelling it right? Substantial. What have I done? What have I done? Let me just copy it. What have I done? Oh, because it's synthetic, not sustainable. I'm so sorry. I'm just... Yeah, okay. So, synthetic air fuel, SAF, for those who are paying attention. Basically, yes, no, and undecided. Please cast your votes. I want to hear from you. And the call is starting now.
Listen-only mode. After the speaker's presentation, there will be a question and answer session. To ask a question during the session, you'll need to press star 11 on your telephone. You will then hear an automated message advising your hand is raised. To withdraw your question, please press star 11 again. Please be advised that today's conference is being recorded. I would now like to turn the conference over to your speaker for today, Eric Fry, Vice President of Finance and Strategy. Eric, you may begin.
Good afternoon, everyone, and thank you for joining us on today's call to discuss GEVO's third quarter 2025 results. I'm Eric Fry, Vice President of Finance and Strategy at GEVO. With me today, we have Patrick Gruber, our Chief Executive Officer, Leke Aguirre, our Chief Financial Officer, Chris Ryan, our President and Chief Operating Officer, and Paul Bloom, our Chief Business Officer. Earlier today, we issued a press release that outlines our third quarter 2025 results and some of the topics we plan to discuss. A copy of the press release is available on our website at www.gevo.com. Please be advised that our remarks today, including answers to your questions, contain forward-looking statements within the meaning of the Private Securities Litigation Reform Act. These forward-looking statements are subject to risks and uncertainties that could cause actual results to be materially different from those currently anticipated. Those statements include projections about the timing, development, engineering, financing, and construction of our alcohol-to-jet projects, our future carbon credit sales, our GEVO North Dakota and RNG plants, and other activities described in our filings with the Securities and Exchange Commission, which are incorporated by reference. We disclaim any obligation to update these forward-looking statements. In addition, we may provide certain non-GAAP financial information on this call. The relevant definitions and GAAP reconciliations may be found in our earnings release, which can be found on our website at www.gevo.com in the Investor Relations section. Following the prepared remarks, we'll open the call for questions. I'd like to remind everyone that this conference call is open to the media, and we're providing a simultaneous webcast to the public. A replay of this call and other past events will be available via the company's Investor Relations page at www.gevo.com. I'd now like to turn the call over to the CEO of GEVO, Patrick Gruber. Pat?
Thanks, Eric. What a change we've had. The acquisition of our ethanol plant, carbon capture plant, and Class 6 sequestration well turning out even better than we imagined. All of this is located at GEVO North Dakota, or GND, as we refer to it internally, and it's all operating really well. We've learned that our carbon sequestration well is unusual because A, it has a Class 6 sequestration well that's been operating since June of 2022. B, we are the only ones using the formation of our well, and that simplifies the auditing and such. And C, it's in an unusually good geology. In fact, a European certification group, Pure Earth, which is owned primarily by NASDAQ, certified our well as a 1,000-year performance well. We understand that we're the only alcohol production site in the world so far with this certification. Also, I must say that North Dakota is an outstanding state in which to do business and grow. It's pro-agriculture and pro-energy business environment, so we fit in really well. Great assets combined with a great business environment combined with growing markets, I believe, leads to great opportunities for growth and making money. That's what's in front of us. At GEVO, we have long believed that carbon is an important co-product that if we can monetize the value for carbon, we can unlock economics for growth products like jet fuel. We are pleased to find out that we can, in fact, monetize carbon value through a variety of methods that Paul Bloom, our Chief Business Officer, will explain in a few minutes. In our business model, we view selling carbon as a key initiative. On a separate and unrelated front, we are learning how to generate and sell production tax credits. These credits are based on the volume of ethanol produced and the carbon intensity score of that ethanol. Because we have a very efficient ethanol plant with a carbon capture and sequestration well beneath it, we can achieve very low CI scores utilizing the rules of Section 45Z of the One Big Beautiful Bill. Leke Aguirre, our CFO, will give more color on this topic in a few minutes, but I can't hold back. I am just so pleased that we sold all of our credits for 2025 production for a total of $52 million worth of credits. I gotta say, we had a lot of learning to do about this too. Lots of auditing, lawyers, insurance people to make these deals as bulletproof as possible. When we start adding up the potential adjusted EBITDA from selling carbon, generating tax credits, making more ethanol, using more of the well, we can see a picture for GND where we could potentially generate more than $100 million a year of adjusted EBITDA just from that site. Get this, this is all without deploying any large capital projects or building a jet fuel plant. Now the question is how best to go about it. Obviously, we're going to go for the low-hanging fruit first, like incremental expansions of CO2 volume, driven by incremental ethanol expansion, and by optimizing which markets we place our carbon credit products in. It's all pretty exciting. If you haven't seen our recent investor deck, please go take a look at it. It spells out more clearly what we're thinking. When we meet with investors and they see what we're doing at G&D, they suggest that we should figure out how to use more of the well, produce more ethanol to improve the adjusted EBITDA base. And then, of course, get on with getting the jet plant built. G&D provides an outstanding platform from which to grow. It's obvious when people see what we're doing. G&D does, in fact, present a great site to build a jet fuel plant. We have ethanol feedstock, great farmers to supply the ethanol plant, carbon sequestration, an industrial complex that's already built. And so now adding a jet fuel plant is incremental. It makes a lot of sense. When we look forward, we think that adding a 30 million gallon jet fuel plant would add an additional adjusted EBITDA uplift of about $150 million to the site. Think of that. We recently were notified by the Department of Energy that they consider shifting their loan guarantee to GEVO North Dakota from South Dakota. I suspect they see the same things we do. Infrastructure already exists. The plants that are there make money, and we can build upon that. And we'll be working with them to sort it all out, taking advantage of what we learned from our ATJ-60 project. I hope to get the financing for the ATJ-30 plant closed sometime mid-2026. Chris Ryan, our President and Chief Operating Officer, will talk about the operations of G&D and our RNG facility, then give an update on where we are with the ATJ-30 project, giving color to the growth plan and cost. Okay, I've talked enough. I'll turn it over to my team, Leke.
Thanks, Pat. We are pleased to have delivered another quarter of improved financial performance. Now, here are the numbers. We ended the quarter with $108 million in cash equivalent, restricted cash. During the quarter, combined operating revenue, interest, and investment income was $43.6 million. Our loss from operations was $3.7 million, and our non-GAAP adjusted EBITDA was a positive $6.6 million. GEVO North Dakota generated income from operations of $12.3 million and a positive non-GAAP adjusted EBITDA of $17.8 million. GEVO RNG generated income from operations of $0.5 million and positive non-GAAP adjusted EBITDA of $2.7 million. Net loss per share attributable to GEVO was 3 cents per share for the third quarter. Just as a reminder to everyone, last year our third quarter revenue was approximately $2 million. This year's third quarter revenue was approximately $43 million, or an increase of approximately $41 million. Last year, our third quarter adjusted EBITDA was approximately negative $16.7 million. This year, third quarter adjusted EBITDA was approximately $6.6 million, or an increase of approximately $23 million. A key driver for improved financial performance continues to be GEVO North Dakota, which is now a core earnings engine for us. This site is demonstrating reliable energy production, efficient carbon capture, and consistent monetization of clean fuel production credits, or Section 45Z tax credits, which are based on production volumes we generate and carbon intensity score. We're also successfully selling voluntary carbon credits to customers who value verified carbon removal. After the end of the quarter, we completed the sale of our remaining 2025 Section 45Z clean fuel production credits from GEVO North Dakota, bringing our total contracted sale for the year to $52 million of credits. We also received net proceeds of approximately $29 million so far. We expect to bring in the rest of the cash over the next quarter or two. We just need to get our carbon into the ground first. We generate production tax credit based on two key metrics: our production volumes and our carbon intensity score. Our score reflects how we manage energy usage at our plants, the amount of carbon we sequester, and other operational factors as measured under the Section 45Z methodology. In order to deliver the credits to customers and bring the associated cash in, we need to generate the credits first. However, when we produce a gallon of ethanol, the value of the related credit is applied to our cost of goods sold. So this creates a timing difference between what we see on the income statement versus when the cash comes in. One way to think of it is that our cash flow from operations can temporarily lag our adjusted EBITDA performance. We view this as a normal aspect of the tax credit monetization cycle. As we move forward, we expect our operating cash flows to normalize and trend towards break even or better in the coming quarters. An additional point I can't forget to mention, and it's important, is our tax credit sales continue to be backed by a tax insurance policy, which mitigates much of the residual risk of this credit transfer transactions. Taken together, these steps, positive adjusted EBITDA generation, recurring monetization of 45Z tax credits, and a credible pathway to break-even operating cash flow, positions us for steadily improving cash generation and financial flexibility. Now I will hand it over to Paul. Paul.
Thanks, Leke. One of the most exciting parts of our progress this year is how we're capturing and optimizing the value of our carbon dioxide co-product, which is approximately 165,000 tons per year that we are sequestering at our CCS site in North Dakota. During Q3, roughly 90% of all the carbon benefits associated with our CO2 sequestration remained attached to ethanol gallons and were sold into low-carbon fuel markets. We are seeing strong values in select low-carbon fuel markets and look to take advantage of those where we have active pathways that include CCS. Going forward, we are applying for more pathway approvals in low-carbon fuel markets that include CCS, allowing GEVO optionality to target those markets with the highest returns. More importantly, we are expanding the portion of our carbon value derived from CCS that we separate from the fuel and sell into the carbon dioxide removal or CDR credit markets. Our recent $26 million 5-year agreement with BioRecro for carbon dioxide removal credits is a prime example of this growth. In addition, earlier this year, we were featured in NASDAQ's corporate sustainability report as one of their suppliers of high-integrity, durable carbon dioxide removal credits. This is great recognition, and we believe it shows that major corporations are looking for the high-integrity carbon removal credits that GEVO can provide. We think the high durability and quality of our carbon dioxide removal credits are critical components of the credit value and market acceptance.
That's Rocket Lab, big beat as well tonight.
Will continue to grow from $1 million in the second quarter to $3 to $5 million by the end of 2025. We expect this business to keep growing in years to come, backed by a combination of spot sales and multi-year agreements. Our CDR credits are certified under the Puro Earth standard, which we believe is becoming one of the leading frameworks for corporate buyers. When you buy our carbon credits, the CO2 has already been verified as being sequestered over a mile underground in the appropriate geological formation where it mineralizes over time and is rated to remain secure for at least 1,000 years. We also believe our ability to produce and deliver high-integrity credits to the market today is a differentiator for GEVO. According to the reporting platform CDR FYI that focuses on the durable carbon credit removal market, approximately 38.5 million metric tons of carbon dioxide removal credits have been sold, but only 2.5% of these have actually been delivered. We think this puts GEVO in a unique position of being able to produce and deliver credits today while others are still working to activate their projects in this growing global market that we understand has a total value exceeding $10 billion. We believe the ability to detach the carbon value from the commodity fuel is unique and powerful because it allows us to serve the market more efficiently. This approach also aligns with our planned synthetic aviation fuel business. For example, the agreement we signed with Future Energy Global, or FEG, in April demonstrates our intentions to offer customers more choices and improve service by selling voluntary carbon credits separately from our commodity jet fuel. Since it will take time for SAF to be available at major airports worldwide, our agreement with FEG will allow airlines and corporate customers to purchase carbon credits from FEG, which have been separated from the physical fuel we produce, to offset their emissions through a book and claim approach. And of course, we believe all of this will be better enabled by Verity, our digital carbon tracking and verification platform, to deliver the proof customers need while avoiding double counting. Through measuring, reporting, and producing verifiable carbon intensity from farm to flight or fleet, Verity aims to simplify carbon accounting through complex supply chains to track final fuel products and carbon credits with the transparency, trust, and truth customers require. It's going to help us, farmers, and other biofuel producers turn carbon into a measurable and marketable co-product while bringing new transparency to the low-carbon fuel ecosystem. And to that point, Verity has been installed at our GEVO, North Dakota facility, and we anticipate it will be fully functional by the end of the year. In addition, in Q3, Frontier Infrastructure Holdings, LLC, announced a strategic partnership with Verity and GEVO to offer North America's first integrated carbon management platform for ethanol producers. Frontier plans to deliver CO2 by rail solutions and permanent CO2 storage in Wyoming, while Verity provides the digital platform for full carbon tracking. Frontier anticipates this unique combination will provide carbon management solutions to ethanol plants that don't have direct access to geological storage or access to proposed CO2 pipelines, while Verity brings our carbon accounting platform to the table to help ethanol producers monetize their carbon dioxide co-product. We like this approach for GEVO as it could unlock new potential ATJ-30 sites that we can explore with more verified low-carbon ethanol producers. And with that, I'll hand it over to Chris. Chris?
Thanks, Paul. At this time of year, the thing that takes up a lot of our attention and operations is corn harvest. At GEVO, North Dakota, we're happy to have a great relationship with the farmers up there who supply us with the 23 million bushels per year of corn we need to keep the plant running. This year, those farmers have done a great job turning out a record harvest in North Dakota in spite of the early frost that occurred in the western part of the state. This season is a good reminder that while weather can have a negative impact on some farmers, overall the ag industry continues to get more crop out of the same amount of land, which creates a need for new uses such as SAF, which I'll talk about in a minute. Farmers in North Dakota are nearing the end of harvest, and at GEVO, North Dakota, we're nearly full of our 3 million bushel capacity, with our cash bids currently around 40 to 60 cents per bushel under the Chicago board price, depending upon delivery month. This is important for our investors to understand. The point is, when thinking about making products like SAF, from alcohol to jet, we have a lot of low-cost, low-carbon, easy-to-handle feedstock at scale that begins with our relationship with the farmers. Related to that, a few weeks ago, we had our second community event where we had nearly 100 farmers and community members spend a couple of hours with us at GEVO while we talked about our improvements at the North Dakota site and our vision for the future. The audience was very engaged and supportive, which makes our work up there much more meaningful. Moving beyond the farmers to our GEVO North Dakota operations, I'd like to acknowledge, once again, the great job our team is doing in maintaining, improving, and operating the assets there. The improvements include fundamental things such as new truck scales, critical for receiving corn and selling feed, improving roads to ensure safety for those farmers, and several energy efficiency improvements. The operations team successfully completed a safe turnaround of the plant in 5 days in September and came back online quickly. For Q3, they ground over 5 million bushels of corn while producing and selling over 16 million gallons of fuel ethanol, 46,000 tons of high-protein animal feed, nearly 5 million pounds of corn oil, all while sequestering 42,000 tons of carbon dioxide, which generates the carbon dioxide removal credits Paul mentioned. That brings us to over 550,000 metric tons of CO2 that's been sequestered at the site since the sequestration operation began in June 2022. That's proof that we can capture carbon reliably each and every day we operate, which is well over 350 days a year. And remember that the captured CO2 it was originally pulled from the air through photosynthesis by plants, then released during our fermentation process in nearly pure form for us to sequester underground. In addition to the operations team, we have a team of engineers at GEVO engaged in engineering a number of improvements at the site, along with engineering the ATJ-30 plant, which is designed to make SAF. Improvements include expanding the ethanol plant, both incremental and step change expansions, expanding corn storage and receiving, expanding our carbon sequestration and utilization, improving energy efficiency. We expect that incremental improvements will lead to substantial increases in adjusted EBITDA at North Dakota, and the step change projects we have in mind could make it even bigger. The ATJ-30 project and expected adjusted EBITDA would be even more growth on top of it all. On the ATJ-30 project, design and engineering work are progressing well. We're leveraging our patents and know-how from previous project design work to shorten our design time, simplify construction, increase efficiencies, and manage carbon. We currently estimate the installed capital cost to be around $500 million, not including financing-related costs. I'm happy to report that we've partnered with the state of North Dakota on a couple of our improvements, thanks to the North Dakota Department of Ag for their generous grants of over $3 million to help us improve energy efficiency of the plant and expand infrastructure required for the ATJ-30 project. Our long-term vision for the future of jet fuel plants is straightforward. Build ATJ-30 right here at GEVO, North Dakota, prove it out, and then copy, edit, and paste that same blueprint across other strategic locations in the U.S. and globally. Today, we want the site to showcase farming and carbon management done right. In the future, we want ATJ-30 to showcase alcohol to jet done right, a model that can be replicated efficiently using abundant domestic feedstocks and proven carbon management systems. Behind all this progress is a talented team of operators, engineers, and community partners who make it happen every day. And of course, we couldn't do it without the support of our farmer partners and the state of North Dakota, which continues to be a terrific place to do business. Back to you, Pat.
Thanks, Chris, Paul, and Leke. We have advanced. We've been de-risking our plans to get the jet fuel production. We've known that to achieve the best economics and carbon scores for jet fuel, that ethanol and the ATJ process need to be integrated, and that we needed carbon sequestration to achieve our carbon footprint goals. At Lake Preston, we would have had to build all three greenfield, albeit the sequestration would have been done in cooperation with the Summit Pipeline. Well, today we have an outstanding ethanol plant and sequestration. Great, de-risked, and we make money on those assets to boot. Oh, and we get to learn how to monetize the carbon with real carbon products. Now we should maximize the adjusted EBITDA from those assets and get on with the ATJ plant. The pieces are coming together. Let's go ahead and open it up for questions. Operator?
As a reminder, if you'd like to ask a question at this time, please press star 11 on your telephone and wait for your name to be announced. To withdraw your question, please press star 11 again. Please stand by while we compile the Q&A roster.
The most interesting and the most important part of every single earnings call. So don't go anywhere. We'll learn a lot about the company.
Our first question comes from Derek Whitfield with Texas Capital.
Good afternoon, guys, and congrats on all of your progress over this last quarter.
Hey, Derek. Yeah, thank you. It's been pretty cool.
Referencing slide 12, it's clear GEVO North Dakota represents significant upside to your EBITDA projections. Maybe speaking to this slide, could you elaborate on the incremental capital and steps required to optimize your operation and a reasonable timeline to achieve $110 million of EBITDA?
Yeah, so it's incremental capital. Incremental capital is like in that 15 million-ish plus or minus a few million range. That's what we think it is. It could change. And this is about debottlenecking the ethanol plant to its natural, get it so it can produce maximally with what we have there. Also optimize the energy use, the capture of more carbon dioxide, all those kind of normal things you can do. Remember, there's leverage every time we do something like that, because as you produce more ethanol, you get more CO2. We can capture more CO2. We can optimize energy, capture more CO2, et cetera. And when Chris is referring to a step change, that would be adding additional ethanol capacity per se, like a whole nother plant. We're going to look at that too. I just want to have a timeline for that. So what you see on slide 12 in our investor presentation, and what, for everybody else, what Derek is referring to is that we have a net EBITDA of something like $40 million on the left side, adjusted EBITDA on the left side of the slide, it's 40 million. On the right side, it's plus 100 million. That's say over the next 18 months to 24 months, we can get up there to 110 million. How fast we do it, I don't know. It depends on how the world is working for us. We're well on the way. If anyone's paying attention, they should see this. We're well on the way to moving towards that 40 million. This is all about just doing what we're doing and have a full year at it and getting better at it, capturing more value from the carbon. We expect our CI scores to go down in the future, so that makes more for the 45Z tax credit. We have Paul's team is really learning how to maximize value from the carbon by selling it as a bundle with a gallon, the carbon value with a bundle as a gallon in low carbon fuel markets, or separating the carbon and selling it separately and maximizing that value. As they learn how to do that, I expect that they will continue to increase. But that's what I'm most keen on, is watching those numbers around the carbon value per ton. So we made a good move by buying this plant. There's no question.
Certainly a great acquisition for you guys. And as my follow-up, I wanted to touch on the DOE loan extension that you guys announced a few weeks ago. Could you elaborate on kind of how that extension and the change of scope that you guys are pursuing increases the likelihood of DOE financing?
I would say, well, I'll comment first. I'm going to hand it over to Leke to give it a little more color. But from my point of view, whenever you have a change of administrations like this, the fact that we survived straight away was good. I mean, that's a good thing. It says we're kind of in their zone of things that are interesting and attractive. They have taken a long time to get leadership in place. They've been and I'm talking about not at the secretary level, but beneath the secretary. And so it took a while for people to get into place and musical chairs a little bit. They're getting their act together. They're looking at it. They see realistically what we've done, and I'm going to reiterate this. When you compare the site that we have at Lake Preston, where everything is greenfield, to taking that site and moving north to North Dakota, where we have an ethanol plant that operates and makes money, has a sequestration center right underneath the plant, it makes money. It is a different game to play in terms of how one thinks about the possibilities of financing. Now, remember, they were committed on the conditional commitment's an actual commitment to do the financing if we do all the prerequisites and get the rest of the funding in place, et cetera. We were surprised that they suggested shifting it up to North Dakota, because we think it's a good idea too. So it was a kind of a meeting of the minds thing. So we're very pleased about that, but it's just the very beginning and we got to go work through it. So I think if they liked it before at Lake Preston, they're going to like it a heck of a lot better up in North Dakota, because we all make more money and it doesn't require as much external financing. The project is much smaller, right? Because we only have to build an ATJ increment. Plus, we might have to do some energy. Does that help you?
It does. Thanks for the color. I'll turn it back to the operator.
Our next question comes from Amit Dayal with H.C. Wainwright.
Hey, good afternoon, guys. Thank you for taking my questions. Great to see the execution continue to come through. With respect to the EBITDA drivers for next year, can we maybe, just get a little bit color on whether it's primarily going to come from, the sequestration capacity expansion, or some of these, debottlenecking efforts you may be implementing? Just a sense of, where the drivers are and how we should think about growth in cash flows for next year.
Yeah, so on slide 12 in our presentation, on the left hand of that slide is what I think a picture of what is closer to what 2026 should look like, is something like that. And give or take still, we're working on it. We'll finalize something after the first year is what we really think. But that's kind of the picture. And remember, we're ramping up. And so this is kind of a curve that's going upward. And so how fast does it go upward? How much faster can it go upward? We know for a fact that there's going to be improvements of carbon score in 2026 built into the big, beautiful bill. So we know we're going to make more money at that front. And then I think on the carbon side, and I'm going to let Paul comment on it in the next year to give a picture of that, because I think that's the one I'm keeping my eye on mostly. I want to see that grow. It's incremental already. We're projecting as to what we should be able to do from where we are today and on an upward trajectory. The ethanol itself is going to be ethanol. The RNG is going to be, we plan super conservatively on RNG. And this is simply because we're realistic on this market. It is just a tough market with, in general, but our plant operates really well. So we aren't padding anything or being super optimistic about that, although it generates value for us. So it's good. And hopefully if the market turns, great, it'll be a huge upside for us. But we are not planning that optimistically. But Paul, I think this question of what's the growth look like, I'm going to rephrase yours, Amit. Paul, give us some color on what you think, the dollars per ton going forward. How's it look? What's that build look like? What's in front of us? How does that pan out? Because we're doing something different than everybody else here.
Yeah, thanks, Pat. So just a little more color on the carbon business, right? As we talked about during this quarter, we're moving more. You see 90% of our carbon value today being sold in fuels. But with like the biorecord deal, we're selling much more into a separated carbon dioxide removal market, right? These credits. And that's exciting for us because those can be like the biorecord deal, longer term deals in the market where we're bringing in more ratable revenue. We're not as subject to, the ups and downs in the volatility that you see in low carbon fuel markets, even in the low carbon fuel credit prices. So that's going to continue to grow. That's, even with the biorecord deal, right? We start growing into, $5 million just, a year down the road with that type of a deal. And then we're going to look to do more of those, right? So you see this, a big piece, and this is how long-term we think this can start adding in this $30 million type range, over the next 2 years between the compliance markets and the voluntary markets as we balance that, so we see where either of those markets go. But we've got a lot of flexibility. That's what we like. And that's why we're continuing to do both, right? We're putting on more pathways in the compliance and the regulatory fuel markets where we can go after low carbon fuel with that CCS value attached, or we can separate that out into the carbon dioxide removal markets where we have that flexibility to maximize our returns.
And then I think the way to look at slide 12 is on the right side of that slide is, a little further out, and I don't have a time frame on it per se because we could do it faster or slower, depends on how projects get done. But that includes an incremental expansion of the ethanol plant, taking it up to like 75 million gallons a year. And that produced more ethanol, more CO2. So you can imagine how the numbers increase because of that, because we have leverage, right? We're making more ethanol, we make more CO2, we generate more credits, generate more production tax credit, et cetera. And that's why you see those numbers. So that's what our picture looks like. And as we work through stuff, and this is all with the low capital version, it's kind of exciting. It's a good place to be. And ATJ is completely on top of all of that. That would be a different spend in a different bucket, a different project.
Right. No, makes sense, Matt. So it seems like, expanding the ethanol capacity to 75 million gallons per year is pretty natural, I guess, in terms of how you are executing and all the other infrastructure you have over there to, be able to monetize that. What I'm trying to get at is, if you were to have to make a call between ATJ-30 and, much larger expansion of the ethanol capacity, would you lean more towards the ATJ-30 with or without DOE funding?
Well, the ATJ-30 plan right now, the way it pencils in with our contracts is to be at an uplift of about $150 million a year of EBITDA. Now, turning back to ethanol, the 45Z credits they end at the end of 2029. So if you're looking at long-term plans of building new plants, what's going to be in the money? Well, ATJ plant, a jet plant, is dependent upon the long-run economics of a 45Z tax credit. Remember, our site, we're lucky we can take a Q too. And so we're pretty much indifferent between those two at the moment, the way that the world is structured. And remember, a Q runs out for 12 years. So we're in good shape on that kind of a front. And so it's not crucial. We'd love to have it extended, love to, but you know what? It'll be what it is. It's going to compete economically. Paul will be successful, and his team will be successful selling carbon. So, it'll be what it is. Ethanol, if we could get it built really fast and do like say duplicate of what we currently have of capacity, how fast can we get it built? How long will the credits last really? You don't want to be in a business of just doing ethanol. You do not want to be in a plain old ethanol business. That's not a good business. It's too dang volatile. This is why Paul was emphasizing turning carbon into a product and selling it gets us into a ratable business. The BioReco deal was a multi-year contract. Think of that, a multi-year contract selling carbon. Really? That's what we just did. We're going to do more of that. That changes the game of what's possible and gets us out of this volatility over the long run. So that's how we're thinking about it. The getting to 75 million gallons is the natural expansion of what we should do in debottlenecking. There'll be other things we can do to optimize energy, lower the CI score further. We're already a very, very low CI score, and it'll go lower as we improve. Well, after 75 million gallons, now we got to build a brand new plant, and that's to do that capacity, that's in the multiple dollars per gallon, to call it, rounding it to $2.50 a gallon for new capacity. Once you're doing a full size plant, say 50 million gallons to 100 million gallons, it's in that kind of a range, ballpark. So does it make sense? Under what circumstance does it make sense? Depends. And so we'll sort that out later, but that's not our focus. We're going to evaluate it, make sure we understand it so we can jump all over it to make it happen if we need to, if the right market conditions are there. But I'll tell you, first things first, get the low-hanging fruit, get the 75 million gallons, get the credits, generate more revenue, get better and better at selling the carbon. Remember, we have an advantage. We have a sequestration site directly underneath our plant. We're the only ones in the world with that. We don't have all the complexities that everybody else has of, pipelines and sharing and all this kind of stuff. Ours is relatively straightforward, and still it's a huge amount of work to get it audited, insured, and all the rest to generate these viable credits. So we need to get good at this. So we're going to do that. Walking before we run, expand incrementally, use our capital wisely, save our powder. We'll debottleneck, save our powder with the DOE, work with them, get that plant financed, and the economics are good. And we will also treat then a full build out of a new ethanol plant as an opportunity to be evaluated on the market conditions as we see them, and working with partners who want to do it.
Right. Understood.
That's how we think about it. So use what we got, maximize what we got, expand ATJ, and then making sure we're not losing sight of these other opportunities to grow, because we could have them and they might be very much real.
Got it. Just last one on the Verity offering. How much more development work needs to be done before you can get more aggressive towards commercializing that offering?
Paul, go ahead and answer that one.
Yeah, so I think we're getting to that point right now, Amit. So this is what I was talking about. Getting this implemented at GEVO North Dakota is a critical step for us. I mean, we've already got it implemented with other customers, but having it running in our own operation, we'll be able to show even other Verity potential customers, say, hey, come look at it, right? Stop by our plant, see how we're using it, see how it simplifies your life, how it makes everything better, totals up all your carbon for voluntary markets, for compliance markets, for tax credits, right? It's really a simplification tool. And so we think that, we're really nearing that point, right, where we can now scale this, just like Chris was talking about ATJ-30 to do the copy, edit, paste. I mean, this is where we can start to do the copy, edit, paste for Verity really more broadly with biofuel producers. So we're in a really good spot.
Yeah, interesting. I think this is going to be a really interesting catalyst.
Well, here's for everyone's perspective. There's everyone and their brothers going, "Hi, we know how to count carbon. We know how to, measure CI. All this." No, you actually don't. It's actually kind of complicated, and you got to keep track of a lot of stuff. There's simple, on the internet you can find. Everyone does their Chat GPT version. Sorry, to get a product that someone buys and transfers money, actual cash on the barrelhead to pay you for something, that takes a whole lot more diligence to make sure it's right and have multiple parties auditing it. In our case, you heard Licky talk about getting even insured. How does that work? In getting that system operating well, working well. And then with Verity, that offers a whole new level of assurance and gets it tracking it back to farm by farm, field by field, integrating the plant in its energy and giving even a stronger score that can be verified and audited. This is the important part, auditing throughout the whole supply chain. That's why we can get paid now. That's why we will get paid in the future, and why Verity is important, because we can take that technology and use it as a service and get paid with other plants. That's why it's important and why it's interesting. We're doing an end-to-end solution. Other people aren't. They're just doing pieces and parts and using their equivalent of internet says. We're not doing that.
That's all I've got. Thank you so much for all the color. I appreciate it.
Our next question comes from Craig Irwin with Roth Capital Partners.
Hey, Craig.
Hey, Pat. Good evening, everyone. Thank you for taking my questions. Pat, can you maybe update us on the conversations with potential customers that could be using your well in Richardson to sequester their carbon? These, I guess, that would be tolling customers or customers where you provide the service for them. I mean, where do you stand with those potential incremental additions to the overall profitability?
Yeah, so I'm going to restate your question. So we have this big site. Our capacity is 1 million tons per year. We're currently only using about 16, 17% of that well. We should use more of it. And so Craig is right. We should use more of it. Paul, what's the plan?
So Craig, couple things. One, as we expand our footprint there and make more fuel, we'll have more CO2 to sequester. So that's step one, right? So we love that because we don't have to go anywhere else. We've already got the capacity. The second part is, think about a complex. When we're thinking about GEVO North Dakota, we're also thinking about what energy sources we need, all the different stuff that we have to put in place to really build out the ATJ-30 plant. But hey, it could be other partners as well. So we are looking and have ongoing discussions today with other companies that would maybe want to co-locate with us and take advantage of some of that sequestration well. So we could be storing CO2 for others and, obviously getting fees for that, helping them sell their carbon credits, all those type of things. And so we're pretty excited about that. And then just like this deal where Frontier is looking at, taking CO2 by rail to North Dakota, there's always options like that. I think we talked about on one of our earlier calls around looking at how can we take more CO2 in kind of virtual pipeline style. Those are things that we're contemplating today. We don't have any concrete plans, but all of that coupled helps to use that capacity that we've already invested in. So it's really about how do we harvest that value from the investment that we already made with this great purchase at GEVO North Dakota, because of that extra pore space that if we use it ourselves, use it for third parties, absolutely.
Yeah, so amplifying what Paul said, this thing about the virtual pipeline, what that means is taking CO2 by rail. That's how CO2 is transported, has been transported forever. And we could do that. The deal with Frontier contemplates that, and tracking it and tracing it. The deal, if we had a rail terminal, for example, we can offload CO2 and put it down the hole for others. That also accomplishes yet another thing. I think that in a few years' time, call it in the 5-year time frame, the Bakken's going to need more CO2. And, great, maybe there'll be a market for enhanced oil recovery CO2. So I think the world at large in that area is going to be interested in CO2 collection, sourcing, treating CO2 as a product. Great, people want us to put it down a hole. Awesome, we can get paid for that. Cool. Get more credits for that, great, or sell it to somebody else. So it's a paradigm shift, and that CO2 as a product should be valued, should be collected and utilized. So we have to put those plans together, but that's part of what we're working on and figuring out. That kind of incremental expansion is not included in our slide 12 that we referred to earlier. It's not part of that. That would be on top of it. That's gravy on top of what you see there.
Understood. So then actually, I wanted to go back to a little bit of the content on your slide 12. The incremental CI improvement that you guys are tracking for over the next number of quarters, how should we go about projecting that or forecasting that from our side? Because it ends up having a fairly material impact on the overall level of profitability. And is this something that we should parse the capital plan and the different pieces of your capital plan that are likely to be completed on a finite time horizon, or what should we do to kind of understand and maybe be a little bit ahead of the curve as we see the CI score improvements over the next couple of years?
I think Lake A, you can help with this one, but there's basically in the big beautiful bill, the CI score drops automatically next year. That's a large part of it, and so go ahead and give that some color, Lake A, and then we'll come back to it.
Thanks, Pat. So high level, I think Pat already sort of touched on it. In the big beautiful bill, the no ILUC that reduces our CI score by a tangible amount, which effectively increases our 45Z generation by another 10 cents per gallon. And then the last bit of the puzzle, which for us we're working on, is are there other decarbonization measures that we can introduce to our facility to effectively be able to get another 10 cents per gallon increase in credit generation. So the 52 million tax credits that we sold this year from GEVO North Dakota, I think folks can easily do the math based on our ownership of the asset for 11 months out of 12 months. That number rounds up to about, call it 80 cents per gallon of credit generation. So next year, we are working actively with the no ILUC and the other decarbonization strategies. We're hoping to be closer to $1 per gallon. And keep in mind, production tax credit is also subject to inflation. And those annual inflation, for example, this year, that's released by the IRS was around 6.6% and some change. Maybe inflation is not going to be that high next year, but you have to factor that into your math as well. So next year, we're going to have tangible increase in that 45Z generation from where we are today. Does that help?
Yeah.
That definitely helps. Well, that's also going to help your cash flow. So, congratulations on the progress.
It's an interesting game, isn't it, Craig? I mean, it's like the world, we did good, our timing was good, and we're learning how to sell this having a real carbon product to figure out a real tangible thing where it's actual tons. And then what does it mean in terms of CI score? How do you monetize tax credits? One of the things that's different from what we're doing from what I think everyone else is doing, we're selling them directly. Lake A's team has done an outstanding job of interfacing directly with the purchasers of these carbon credits. We aren't going to a broker where the broker has to go figure it out later. Our stuff is done based on real CI scores, audited by multiple parties, stuff that's based on carbon that's gone down a hole. And then Lake A's been able to strike really good deals, getting good value. When he says, remember, it's a 67 million gallon plant, he's talking about $1 a gallon. The maximum value you can get is about $1 a gallon from the 45Z. So we are one of the lowest CI score plants under the 45Z big beautiful bill, and it looks like we're in a really good position. That's an awesome thing. And this is before we've done anything around decarbonization of the energy at the plant. It's just that it's a very efficient plant. It is not taking into account agricultural practices like so many people talk about. It's not taking that into account. It's just well run, a great sequestration plant. Our team is good at capturing carbon, putting it down a hole.
So maybe I can ask another question, right? Red Trail, what did they do right on the commissioning of their well? There's another well that was supposed to be testing, maybe commissioned, it's another Class 6 well for, I guess, the third guy that's supposed to be on, but they've been late. And they're not eager to confirm that there's a ribbon cutting on Wednesday, right? You guys have brought up your well, generated credits consistently off it, and, obviously had pretty clean execution. what did GEVO really do, or what did Red Trail really do right, the team at GEVO now, that allowed you to execute consistently?
Yeah, Chris, would you want to go ahead and explain this? Yeah, go ahead and explain this because it's a fascinating story.
Well, okay, let me tell you that it starts with the former CEO of Red Trail, a guy by the name of Gerald Bachmeyer, who really led that. And he, earlier in his career, he did oil and was involved in drilling. So I would argue he knew how to pick the right contractors to do the work. And they really focused on doing good quality execution because, you know, the guys that ran that plant, including Gerald, were boots on the ground, you know, get her done guys that know how to get things done and know how to get things done well. And so that's really the foundation that really led to doing that well.
So what you got here is, remember up in that area, you got farmers and remember, Red Trail was a co-op, big giant co-op, 900 plus members. But corn guys are oil guys and vice versa up there. And so it's actually a wonderful place to have a plant like this, who you're trying to work with the petrochemical industry. And the guys are big farmers anyway, and so everybody cooperates. And so they have a lot of expertise about how to drill wells. That's what Gerald was about, and knowing how to do it. And he definitely had his own way of going about it that was different than what was being sold to others. That I've been told over and over again, and I believe it to be true. And so that's why I think we didn't have the problems that other people have seen.
Understood. Well, we don't have to talk about those problems. I will say congratulations for your success, and thanks again thanks for taking my questions.
Of course.
As a reminder, if you'd like to ask a question at this time, please press star 11 on your touchtone phone. Our next question comes from Peter Gastrike with Water Tower Research.
Hi, congratulations on your results, and thanks for taking my questions. The partnership that you've discussed with Frontier is certainly very interesting. It looks like it presents a lot of opportunities for you. The Summit pipeline has obviously been very, very quiet. Just curious, if we look at Frontier entering this market, are they coming in as a potential competitor here to Summit, or should we think of Frontier more as being complementary and maybe focusing on the ethanol plants that are not, on that pipeline route? Like, how should we think about this entry into the market?
Paul, go ahead and take that on, please.
Yeah, Peter, no, great question. I think it's, if you look at what we had, or Frontier really had in the announcement, they talk a lot about how many plants are kind of stranded. They don't have access to geological sequestration. They don't have access to pipelines today. So I think that's really the first and foremost market, because, like Pat said, CO2 is transported by rail all the time. So this gives those plants that optionality. And basically, so now, you think about, you either have the right geology, you may have access to a pipeline, or if you don't, now you've got a rail opportunity to go to a sequestration site, like what they have in Wyoming and we have in North Dakota.
Okay, got it. Thank you. Just a second question about overseas markets. Could you talk a bit more about the agreement that you've entered with Hausch in Europe and the ethanol to jet facilities? With the SAF feedstock restrictions in Europe, what's the strategy there? And also, just curious broadly, your traction overseas markets and where you see the best prospects there.
Paul, go ahead and take that one again.
Yeah, sure. Hausch is an interesting company that we really have enjoyed working with, and they've got a good focus. They're a hydrogen company fundamentally, and so as we're trying to find the right combination of sites and feedstocks, we think we've got a good partner. When we think about the feedstock, right, there are limitations. So we do need to think about Refuel EU doesn't allow corn ethanol, crop-based fuels to qualify. So we are looking at sources, carbohydrate sources still for ethanol, obviously, but they come from waste and residue type feedstocks that will qualify for those markets. So that's kind of where we're focused. Those exist. We have a whole team that's taken a look at that. And then the question really comes down to what are the economics, the netbacks from Europe versus North America. But like Chris said, we really see ATJ-30 as a global business. So even not just Europe, this is like, where can we find the right carbohydrate feedstocks? Ethanol is ubiquitous. And so it's really about how do we have a plan and then have the right partners in those geographies that we can execute.
Okay, that's great. Thank you very much, and congrats again to the team.
Thanks.
That concludes today's question and answer session. I'd like to turn the call back to Patrick Gruber for closing remarks.
Yeah, one of the interesting things, if I would encourage people to take a look at the growth of the jet fuel demand out to the future. It's quite interesting in that it's continuing to increase here in the U.S. and around the world. Refining capacity, however, is not increasing, and not here in the U.S. In fact, it's decreasing. There's only a finite amount of jet fuel in a barrel. This means that there's going to be a shortage of jet fuel here in the U.S. A shortage, it's incremental shortage, but it adds up to big numbers, about 2.4 billion gallons a year by about 2024. We have to do something different, bring it in, import it, or make it through alternative sources. You'll find that if anyone does start searching and looking at this, you'll find that the world predicts that everything is going to be fulfilled with SAF. And SAF, of course, is jet fuel plus its carbon, but think of it as just jet fuel. And so the question is, will all that get built really? And you look at these projections, and it's already behind schedule everywhere in the world. You know what that means? Jet fuel price is likely to go up, and with the U.S. will have to import more jet fuel. With this administration, they're not big on importing products, and we can make them domestically. Remember our premise. Because we get netbacks of value from the co-product of carbon, because we get netbacks from protein and the oil, the corn oil, we can deliver cost-competitive jet fuel to the marketplace. Cost-competitive with petro. Pretty fascinating. 2.4 billion gallons, remember, is more like 70 plants needed in the U.S. over the next decade. Well, that's a target-rich environment. That's what we're looking at here. That's what makes it interesting and why we don't lose track of those ATJ plants. We can use more ethanol. We can use more corn. And it makes huge job growth. It improves energy security. It's a good overall practical story of doing cost-competitive energy delivered to the marketplace as an alternative. And do I think that we'll wind up building 70 plants? No, that's not 70. The ethanol industry did it when they went big, when ethanol did their boom between 2007, 2012. They did more than that. So it's possible to do, but for us, realistically, no. I'll just take a bite of that, though. That would be great. And then we can do the same thing around the world. That's what's in front of us. We got a great platform, GEVO North Dakota. This acquisition turned out better than we ever expected. We have cash flow coming. It's good to see. We can expand it. And then we have this huge opportunity and platform, along with all of our intellectual property and designs around the jet. One other last comment around the ATJ that I'll mention, because I think it's relevant to the questions that we get in the marketplace, is that in technology readiness sense, every single step that we're planning on deploying at our at ATJ-30, every one of them is proven commercially already in this world. Technology ready level is 9 for all the steps. That's different than anyone else's ATJ technology. Thank you all for joining us. I appreciate it. Thanks for all your support. I'm proud of my team, proud of what we've done. Thank you.
This concludes today's conference call. Thank you for participating. You may now disconnect.
Well, I don't know what about you, but I'm having music blaring at me. I think it was a good call. Good updates, good guidance, solid guidance, actually. The whole atmosphere was very, very upbeat and straightforward, and sort of like the questions. I like the questions. You can see the people, the analysts and the analysts and the journalists, and they know them. They're not for the first time talking to them, so you could feel it. That was good. Well, What do you think? What do you think? I'm running a poll. I'm just running a poll. I'm gonna keep it on for a few more minutes, but I will need to go. So we're going to wrap it up. I'll tell you what's on the plan for tomorrow. But before we do so, we have a poll. We are running a live poll. Listening to the call. Don't know where your chat window is. So in the chat, listening to the call, is GEVO a buy, hold, or sell? Buy, hold, sell, and undecided. So you have about, let's give you 20 seconds. Let's give you 20 seconds to cast your last votes in. And we're going to close the poll. Tomorrow. What is on the plan for tomorrow? Well, let's have a look. So tomorrow morning, if you want any more earnings, if you want any earnings from Sensei, that is what is on the offer. The Nebius Group, SIA Ltd. Did I just say SIA? C Ltd. Oh dear. Anglo Gold. Don't know. None of these ring a bell to me. But you can. Let me. If I zoom in, can you see it better? Okay. So that is. This is. Right now, so we had ASTS, Space Mobile, Rocket Lab, CoreWeave, Big Bear AI, quite big, Plug AI, yeah, quite big day today for earnings. Don't get confused. Is Jim here? Jim is not here, is he? He requested Oxy, Occidental, what do they call? Occidental. I literally just looked at it a few seconds ago. Occidental Petroleum. Occidental Petroleum Corporation. They release the numbers now, but the earnings call is tomorrow. It's 6 o'clock UK, which is 1 o'clock Eastern, I believe. 1 o'clock Eastern. I'm now setting up the event. So if you wait 10-15 minutes, you will see the event on the screen. So that's tomorrow. Sorry, that's today. The Oxy is booked by Jim. Jim Newsong, that's for tomorrow. Tomorrow morning, that's the stocks for you. I zoomed it in, so hopefully we can read it better. After hours. I've got on my. I think I will do that 1 o'clock, the Oxy, and then I would like to do something after hours. So I'm eyeing Microvision, LiDAR technology. They appear with laser. Oh, thank you.
Arby donated $1.
Thank you, Arby. I love it. I'm not drinking tonight. Okay.
Number 1, tumbler
I'm not drinking tonight.
Cool
By the way, thanks for the Thursday show. I had to literally sleep like 3 hours and wake up to work the next day. Yeah. So thank you for that. I appreciate it. It was very hard on Friday, but yeah, it was great. It was the best show I've ever had. And you all made it. So thank you very much. Sorry. Yeah, we have Microvision. I would like to do Microvision. That is pair with laser. What are laser? Lumina technology. No, Lumina. Laser. What is laser stock? We've covered them. Laser stock. Yeah, Lumina Technologies. Yes. So we have competitor to Lumina Technologies and Microvision. They have been securing quite interesting and quite lucrative corporations as well. We also have Oklo, we have Ola Mining, we have Lightpath, what's that? Upexi, QuickLogic. I don't know if any of these are interesting to you. Wednesday morning, we have Circle Internet Group, On Holding. To be fair, I've never heard of half of these stocks. So have a look if there's something interesting. Tomorrow, Wednesday after hours. We've got Surf Air Mobility. Okay, I missed it. So we're gonna do Surf Air Mobility. That's an eVTOL market player. I was going to do Cisco because they are involved in the eVTOL sector as well, and they will be member. They are the founding member of the LA28 Olympics, and I think it's worthwhile to track them because they have been delivering solid product. They will be, yeah. No, we do Surf Air. We do Surf Air Mobility. So Wednesday, we're gonna do Surf Air Mobility. They are operating. They'll be operating eVTOL aircraft in the near future. They'll be one of the operators. Thursday, we have in the morning. We have Disney. We have JD.com. We have Ondas Holdings. What's this one? Bitfarms. Brookfield, Sharpling, Billy. The hell is that? Gambling.com. That could be interesting. I'll tell you what, we can do gambling.com and we can take it up on the name and we can buy shares before the earnings. That'll be good. Gambling.com. Don't do it. But yes, I can see Zach's messages coming through. Zach's messages are coming through. And actually, they threw a spanner in my works because I was going to cover Red Cat, a drone manufacturing company, a new emerging, well, they are quite well established now in the defense sector. However, can't do this to Zach. It was supposed to be, actually that helped me because we could bring you Archer earnings on Thursday. That was supposed to be last Thursday. They moved it to the following Thursday, which is this week, a Virgin Galactic after hours. It could be a very big event. And I might get Martyn to call in as well. You don't know. You never know. I might get Martyn to call in. But yeah, Thursday after hours, we are doing Virgin Galactic. And then Friday morning, I don't think there's anything we have ever invested in, to be fair. And after hours Friday, again, maybe Sidus Space. If I get a super chat for a tenner and we have Sidus Space investors, yeah, there's nothing else I would be aware of. The following week, however, let's quickly go through the following week. Xpeng on Monday, massive electric vehicle producer and developer. Electric cars, electric motorbikes, and also eVTOLs. So I will try to bring you this as best as I can. I'm expecting this company to boom. Next year, they could boom massively because they are massively increasing their production capability, and that could be huge. So let me just put a little notification bell on it. So I will try to bring you this on the following Monday, Monday the 17th. Then after hours, we've got Ecom. I might cover that because that's one of the founding members of the LA28 Olympics. So let's put a pin in that. Home Depot in the morning on Tuesday the 18th. What else we've got? Baidu, Medtronic, IQ. Yeah. My eye is twitching. I'm sorry. Klarna. That could be interesting. Klarna in the morning. They recently had their IPO. That'll be their first report. First earnings report. That could be interesting. After hours on Tuesday the 18th. I don't think there's anything interesting, to be fair. Power, 360 Finance, Stair Bulk Carriers, Dolby Laboratories, Lazy Boy Incorporated. Okay. Wednesday before market, Target, TJ Maxx, and Wix, along with Global E-Line and Bullish as well. We cover the IPO. I believe we still have some bullish investors. So if you want to log this in, I'll be with Sensei because it's the morning half of the day. So Sensei could cover this for you as well. And Wednesday the 19th, that'll be the biggest, probably the biggest day of the whole quarter, of the whole earnings season. NVIDIA on the 19th. And those who follow at least a bit what's going on recently, you know that NVIDIA have announced probably too many partnerships. NVIDIA is just beyond my comprehension now, because they have their new chips, and they have rolled it out, and they have announced so many new partnerships in so many sectors that I can't wait this earnings call. This will be massive. So I will be covering this. No doubt there'll be massive beat as well. And as Martyn has been saying, NVIDIA is a $200 stock by the end of the year. Well, NVIDIA did it already. NVIDIA already did it. Thursday, the 20th, Walmart. What else we've got? Zim Integrated Shipping, NanoX Imaging, Bath and Body Works. Does somebody want a Bath and Body Works earnings call? And then after hours, we've got Thursday the 20th, Intuit, Webull Corporation, Viva Systems, Elastic, The Gap. Yeah, this earnings season was very difficult. Friday the 21st, I will bring you EHang. I will bring you EHang as well. But this earnings season, this quarter has been very difficult because all the good ones were jam-packed in one day. And I mean, it's good for investors, good for traders. It's not so good for us to keep on top of it and bring you everything we want. So yeah, just to give you a little taste for this and next week. So tomorrow I will see you with Occidental Petroleum, 1 o'clock Eastern, and then after hours, unless somebody requests something else, we are doing Microvision, a LiDAR company. So let me close the poll. Let's get quickly through the chat. I've seen see the trees. Thank you very much. I've learned so much from your comments, from your chat. That was great. And I'll be focusing on this company more since they beat now for the second consecutive quarter, and I can see the upside, and they are now in the revenue phase, like full on. I will keep an eye on it, and I might bring you some more content on it. Obviously not to you because you know more than I do, but yeah, to the Lucases, to our audience. Cedar says GEVO is targeting final investment decision in mid-2026 for its planned ATJ-30 facility and bolt-on growth project to produce jet fuel from existing low-carbon ethanol production at GEVO. Jim, did you catch the time? Tomorrow, 1 o'clock Eastern is the call, so I will start at least 15 minutes before. I'm now scheduling the event. Let's see how I get on. I need to finish a bit. I need to finish a bit earlier at work to get everything ready, but I will do it. And I will start probably 20-15 minutes before the call, which starts 1 o'clock Eastern or 6 o'clock UK time. Abby, thank you for the super chat. I'm not drinking tonight, mate. Not drinking tonight. I was traveling all weekend. I spent like 15 hours behind the wheel for a certain reason. That was for work. That was for this work. This very work, or for Martyn Lucas Investor and eVTOL Hub. You'll find out very, very soon what I have been up to. I traveled across the whole England, literally, from Cambridgeshire all the way to the very east coast. I'm not telling you anymore. And I'll be telling you, and I'll be telling you more news about vertical aerospace as well towards the end of the week. So stand by. See an estimated construction time of 2 to 3 years. This is why the pathway to sustainable aviation fuel projection is still a couple years out, but they are near profitable without sales from this growing market. Exactly is the tax credits. WTF says, I have Oxy, didn't know they had earnings. Yes, the numbers went out I'm not going to tell you the numbers now. I'll tell you the numbers tomorrow. The numbers should have been out now. The earnings call is 1 o'clock Eastern tomorrow. Cedar says, Luminar, yeah, thank you. I remember it right. Thanks for the GEVO. Well, you are welcome. You requested this. That was one of your membership's perks. Thank you for keeping me busy and on my toes tonight. No, it was great. It was a great call. I wasn't upset, but I wanted to do Rocket Lab and ASTS. But I tell you what, I like the call. So thank you for bringing this opportunity. I like the call, and I'll be looking into that much in depth. That will be on my short list, I would say. Let's call it this way. So yeah, thanks for bringing this to our attention. Abby, yes, thank you for the coverage and information and education. Excuse me, I don't know what's going on. Thank you for the coverage and information and education once again. Well, you are more than welcome. I love every single show with you. And Zach is getting excited. 3 more days. 3 more days, exactly. And Abby can't wait. Okay, so listening to the call, is GEVO buy, hold, or sell? 46% of you said buy, and I agree. 10% and hold 8%. We had fairly small audience because this stock is not trending. There was a long gap between obviously the morning show and me. I didn't do any eVTOL build up to it before because I'm still catching up. I was literally unpacking a couple of hours before the show. I was connecting everything back again. Excuse me. I was reconnecting my studio. So tomorrow I will, and also last week was so much giving, and yeah, I still haven't caught up with the whole eVTOL world, with the news, and there was more news coming through the weekend, so I just need to get on top of it. So tomorrow I won't probably do any eVTOL show either because I've got the Oxy earnings, and then I'll be doing Microvision unless somebody else requests something else, but I don't mind. I will catch up with you later on that. Unless we have some breaking news. If we have some breaking news, I'll squeeze myself in between myself. So, Abby, yeah, I missed the Bloody Mary show. Yeah, sorry about that. I was going to record a video, but you completely ruined me on Friday. Sorry, on Friday morning, you completely ruined me. So, yeah, I couldn't do anything. I didn't do newsletter either, but I will make it up for you because the content coming in the coming weeks, something exclusive, something completely different. We have something for the first time ever on Martyn Lucas Investor, and this is a massive milestone. And it's not my own milestone. This is milestone of me, Martyn, and Sensei, and all of you, all of us, all together. And I'm not gonna say anymore. I will say it towards the end of the week. So massive milestone for our channel, and there'll be more and more exclusive content I'm working on. I actually have worked on over the weekend, so I'll make it up for you hopefully. Cedar says liking the setup on the 4-hour chart on GEVO could be a big week. Well, let's have a look into that, shall we? Where do I have 4 hour? That's the monthly chart, isn't it? No, 4 hour, 3 months, 4 hour. No, that's an hourly. So if I zoom in this, hang on, I can change it on here, can't I? Oh wait, hang on. So we've got that's 2 hour. Really? No, I'm just messing everything up. Okay, let's go to 3 months and change it to 4 hours. Change it to 4 hours. There we go. So if we zoom in, see there? Let's have a look. So if we zoom out, exactly, this is the trend line. I don't remember when I did a trend line. It must have been last week when you requested the earnings. However, look at that volume. There's no massive spike in volume, but look at the RSI. It's coming up as well, which is good. So the stock is not oversold. The stock is steadily growing. How do I approach this? Yeah. Looking interesting. See that. What is your next buying zone? I'm interested. What is your next buying zone? Will B2Q. I am in vertical at $4.30. Only 158 shares, but cannot wait for decent trade. Congratulations. It won't be long. The flight, the piloted fully VTOL flight, the transition is imminent. I was expecting it on Saturday. Didn't happen. Didn't happen. But I'm expecting it fairly soon. It's imminent. We are talking days. We are not talking weeks anymore. Cedar says, seeing a head and shoulder pattern, looks like it wants to get back into the 235 area. Well, on the hang on. As the 4-hour chart. Are we talking about this? Well, you have a lot of fantasy to me. I can't see it, but fair enough. Fair enough. Fair enough. Cedar says, I bought more shares today at $2.11. To be fair, I risked it as well. I was gambling a bit. I didn't want to tell you before the show. I didn't want to buy it. I didn't want to affect you, but I bought a few shares before. And I leveraged as well. I risked. I was risking a bit. It was a risky trade, but it was only 20 quid. So I'm gonna make what? If it goes up or if it stays, I will make what? Probably a tenner, 5 quid. I don't know. It was just for fun. So I'm enjoying and I'm engaged for the call. But yeah, congratulations, Cedar. Congratulations. You obviously have been following them very thoroughly, and you are ready for your. Are you gonna hold, or are you gonna trim your take your profits and trim it on the way up, or what is your target? Cedar says, Vaz, I will send you a friend request on Discord. We can chat there if you would like. Yes, I would love to. However, not tonight. I've got a lot to catch up with. I need to do washing. I need to unpack my mobile studio. I need to fill up some forms for tomorrow for work. But I will, yeah, send me the request. Definitely. More than happy to have a chat with you. I would love to. Okay, I think it's time to wrap it up. Thank you everyone for joining me. I loved it. Let's have a look at the markets. What are we going through? The S&P. Oh, the S&P went flat. Correct. Let's have a look at the S&P. USA 500. USA 500. Why is it flat? Oh, it's not flat. It reset. It reset because it's a new session. So it's showing after hours. So after hours, we are flat. On the day, we are up. NASDAQ. I don't understand why NASDAQ didn't reset though. That should have been around 0 as well. Bitcoin up on the day. XRP 6.81. Slightly up before what it was around the closing bell. Ethereum still down but recovering slightly. Gold inching up and silver holding for 48, which was literally exactly before we started the call. Okay, and the eVTOL stocks, obviously, eVTOL stocks. eVTOL stocks, so if we go to here and zoom in, let's zoom in. Joby is flat after hours. It had some good recovery. This is final reaction on the bit of positivity on the market, on the hinted or foreseen government lockdown ended, and this is reaction to the earnings call finally as well. So what you can see here from this morning, 1504, or last closing 1504 or 1505. Now we are up. We went all the way to 1620. No, 1616. That's a good price. I would not be surprised if we keep running with Joby. Archer I'll be very careful with Archer. That can fall back on its bottom again. I would not be surprised if we retest those $8.20 tomorrow. I wouldn't be surprised if Archer starts coming down again. So $8.20. Don't forget there was a dilution on the earnings call. I missed it because the numbers came out late and I didn't go through the whole filing. And yeah, I missed it. Archer actually they invested in the Hawthorne, was it Hawthorne Airport, in the assets, and that was, the money was raised through a dilution, and I completely missed it. And they diluted like 60 million shares, if I'm correct. So I need, again, something I missed, busy week, trying to keep on top of everything. They released the numbers late. I need to catch up with it. I will bring you the ins and outs, and I'll bring you the update. Vertical Aerospace after hours. Vertical Aerospace after hours is not responding. It is now. Okay, so this is a good sign. I like it. I like it. After hours, we go up. Hang on. It's slightly delayed, isn't it? How do I refresh this? Do I refresh this? That's slightly delayed, Vertical Aerospace. Let me... Yeah, we are missing a few candles here. What's going on? What is vertical? Let me just check something for you. Why is... After hours, 4:38. So that is correct. It's just not updated somehow. Weird. 4:38, that is good. What I'm seeing here was before the market opened. Oh, sorry, we opened higher. That's good. Yes, there was a reaction, but we are not touching yet the support. You can see we are slightly going up, and after hours numbers are up. That's good. I think vertical will be bouncing again between this support 420 and 460, up and down before the flight. I think the flight is priced in already for the investors, and vertical will be going sideways for a few days. EHang, that's recovering again from Friday. Nothing significant on this scale. Horizon Aircraft, I think that will break through the $2 eventually. Eve Air Mobility, we are not getting any after hours data, but it's going sideways. And Beta, look at it, after hours, nice little upside. Beta Technologies has been doing fairly well to me, considering they just opened their trading on New York Stock Exchange on Tuesday. That's good. And they already hit all-time high twice, or they created a new all-time high. And I'm not showing the chart, am I? I wasn't showing the chart, was I? I'm sorry. It's time to, I think it's time to wrap it up. Let's go quickly through the chat. And I haven't been drinking. Look, I haven't had a single drink tonight, yeah? Right, let's wrap it up. I need to go to bed. It's late. Okay, see that I've got your insides here, so let's have a look. Let me make sure I'm showing the chat screen. Okay, thank you. So Will, I'm in vertical, $4.30, only 158 shares, but cannot wait for a decent trade. Yes, congratulations. See the been trading and investing since 2018. Good. Why Joby go up? Well, hopefully my answer was good enough. Multiple, yeah, the macro market optimism, the government shutdown and in foreseeable future, and that's the reaction. Finally, the reaction on the earnings call. See the trading and investing in GEVO since 2018. Wow, I expect a run to $2.51 in the next 1 to 2 weeks on GEVO. Wow, well, good insight from you. If it can clear that level with volume, the next Fibonacci is 307. Been trading in this region for the past 3 years. Usually, the longer it keeps trading in this range, the more bullish the setup becomes. It doesn't guarantee a breakout, but usually there is one. I'm betting on it. Well, good luck to you. Good luck to you. Right, it's time to wrap it up. Tomorrow, before 1 o'clock Eastern, I will be live with Oxy. And then after hours or for the closing bell, I will be up with probably Microvision. And if there are any breaking news, obviously with eVTOLs. That's it from me. See you tomorrow on Sensei's show. I will be watching. I won't be there. I'll be watching. And then in the afternoon on the earnings. Thank you very much for joining me. Take care of yourselves and each other.